Okay, so the previous one we already looked at the example of Rpgt computation. So now we look at the assumption from Rpgt. So we have four assumptions from Rpgt. The first one, schedule 4 assumption, that we already also have used that assumption in the Rpgt computation. The second one, private resident assumption. The third one, no gain no loss situation. This is very famous assumption. And the next one, the Rpgt assumption as per POA 360/2018. So this is as per the Gazette order. First, Schedule 4 assumption, individual. Again, this assumption only applies to individual. Disposing real property on or after 1st January 2010 would be given 10% of chargeable gain or 10,000, whichever is higher, as assumption. Again, only applies to individual. If for company, not entitled, so the amount will be nil. The Schedule 4 assumption is deducted against chargeable gain, and the balance of chargeable gain will be subject to Rpgt rate, as what you have looked into the formula before. And this Schedule 4 assumption doesn't apply to other than individual, partnership, company, limited liability, and so on. Schedule 4 assumption also applicable to part disposal of land. So we will use E per B times C, and then we compare with the 10% of the chargeable gain, whichever is higher. However, for learning purpose, we seldomly look at this Schedule 4 assumption for part disposal of land, which means when it comes to part disposal, we still use the full Schedule 4 assumption, either 10% of chargeable gain or 10,000. So the second assumption is private resident assumption. So this is assumption on disposal of one residential property, which is the assumption of the property that you reside, or you actually occupy. It is known as once in a lifetime assumption and must be exercised during submission of return to IRB by applying for a specific declaration form for Section 8 of Rpgte 1976. So there is a specific declaration form. So once in a lifetime, so it only applies to one residential property and once. The application is only once, cannot apply for few times. Conditions that must be fulfilled: individual is a Malaysian citizen or permanent resident. Real property must be a residential property or part is used for residence. The residential building is occupied or rented or fit for occupation. Means if either you occupy by yourself or by your family, or you rent for occupation or for residential purpose, and not used for other purpose such as business. And disposer not elected for the assumption prior to this assumption because it is only available once in a lifetime. With effect from 1st October 2005, both husband and wife can have a claim of private resident assumption individually on the same property, but again only once in a lifetime. So this is the example. Johan and his wife Jannah has jointly acquired a double-story house for 246,000 on 3rd March 2016 and sold it for 350,000 on 10 June 2019. Johan and his family occupied the house prior to disposal. Johan and Jannah had never made an election for private residence. So state with reason whether both Johan and his wife are entitled for private resident assumption. So in this case, since they both had never made an election, so both Johan and Jannah are eligible. Because they both are individually a Malaysian citizen, the disposal is in relation to a residential premise and has been occupied prior to disposal and not being used for other than for residential purpose. They both have not elected for the private resident assumption before. So how to apply for this private resident assumption? So again, this will be as what you compute before. You have to state the date of disposal and the date of acquisition. So disposal price 350,000 minus acquisition price 246,000. You get chargeable gain 104,000. Since this property is jointly acquired by both Johan and Jannah, the chargeable gain will be the share of joint ownership. So 52,000 for Johan, 52,000 for Jannah. if they both been approved for the private resident exemption, they will get full exemption, okay, minus private resident exemption for that share of joint ownership. So in this case, no RPGT payable for both Johan and Jannah in respect of the disposal of that property. But again, it only applies to one residential property and once in a lifetime. So if let's say Johan and Jannah have other property, okay, in future, they cannot apply or opt for this exemption anymore. So the second one is no gain, no loss, okay, which is when DP is equal to AP. No gain, no loss situation is at the point of transfer, it is a no gain, no loss situation. But at the point of disposal, it will be subject to RPGT. So there will be actually 3 points. First, okay, from A to B. So at the point of transfer, from A to B, no gain, no loss. Then B want to dispose to C, that will be at the point of disposal, subject to RPGT. So at the point of transfer from A to B, no gain, no loss. So it will be what we say here, benefit to or good to taxpayer. Okay, at the point of disposal from B to C, it will be benefit to the IRB or tax authority because subject to RPGT. So we have the first paragraph of first transaction, a gift transaction, according to paragraph 12, schedule 2. So generally, disposal of asset by way of gift shall be deemed to be a disposal at the market value of the asset. For gift transaction, remember, we already learned before disposal deemed at market value. One of the situation is for gift transaction. So generally, it will be at market value. However, if the transfer of real property as gift between parent and child, husband and wife, or grandparent and grandchild, connected person, and the transfer happened within 5 years after the date of acquisition, so there will be a no gain, no loss situation. So the implication to donor, which is a disposal, no gain, no loss situation, disposal price deemed equal to acquisition price, and the disposal will not liable to any RPGT. Okay, only when the transfer by way of gift is between connected person, parent and child, husband and wife, grandparent and grandchild. For the beneficiary or recipient or the acquirer, so he or she is deemed to have acquired the real property at the acquisition price paid by the donor plus all the permitted expenses PE incurred by the donor on the real property. So that will be the deemed acquisition price. So you see the star for the 5 years, I will actually explain further. So gift transaction, give to close family members within 5 years of acquisition. So this is the update on the gift transaction effective from 1st January 2017. So if the gift to close family members within 5 years and the donor is Malaysian citizen, so your answer is yes. So the donor will have, okay, or will subject to no gain, no loss, and will not have to pay the RPGT payable because disposal price is equal to acquisition price. So the recipient or beneficiary is deemed acquired at the same, okay, implication just now at the acquisition price and permitted expenses of the donor. So that will be the deemed acquisition price. But if the donor is not a Malaysian citizen, so the donor is deemed disposed at market value. So no more, no gain, no loss. So if there is an additional condition for that gift transaction to fall under no gain, no loss, the donor must be a Malaysian citizen. So next, updated, okay, from the budget 2019, there will be no more holding period of 5 years applies. Okay, which means, remember just now, the transfer must be made within 5 years of acquisition. Okay, but that is prior to 2019. If let's say you dispose in 2019 onwards, okay, the holding period is no more 5 years. So even though you hold for less than 5 years or you hold more than 5 years, okay, you can also subject to no gain, no loss, provided that, okay, the transfer is between connected person and the donor is Malaysian citizen. So applying both updates, the condition for no gain, no loss, this one just now, transfer as a gift between connected or related person, and the donor must be a Malaysian citizen. So only this only this condition with effect from 2019. But if let's say that transaction happened prior to 2019, okay, you must apply that 5 years of acquisition. So example, gift transaction. A single-story house owned by Ali was transferred to his son Ahmad on 5th April 2017 as a wedding gift. Ali bought the house on 18 June 2014. So expenses incurred by Ali were, so Ali is the disposer or donor, Ahmad is the beneficiary or recipient. So this is a gift transaction from father to son. In May 2017, Ahmad received insurance money of 28,000 for damages caused by fire in the house next door. So Ahmad is the beneficiary. So remember, at the date of transfer, that will be no gain no loss situation. At the date of disposal, subject to Rpgt. From Ali to Ahmad, no gain no loss. From Ahmad to third party, then it will be Rpgt. Ahmad sold the house on 2nd March 2019 for 178,000. So determine Rpgt application, for the following disposal. First for Ali, second one for Ahmad. So first, no Rpgt payable by Ali on the transfer of the single-story house to Ahmad on the basis of this is a transfer of real property by way of gift between father and son within 5 years of acquisition. Okay, so you have to highlight the 5 years because prior to 2019. And Ali as a donor is a Malaysian citizen because the condition for Malaysian citizen take effect from 1st January 2017. So it falls under no gain no loss situation, paragraph 12, schedule 2. Disposal price deemed equal to acquisition price, and Ahmad, which is the beneficiary, is deemed to acquire the house at his father's, Ali's, acquisition price plus any permitted expenses incurred by his father on the property. So this will be for Ahmad on the date of disposal subject to Rpgt. So again, you have to state the DOD and DOA. So the DOD, so when Ahmad sold the assets, the DOA is when the Ali transferred to Ahmad. So disposal price, consideration received 178,000, that is the only item. Acquisition price, we have the deemed acquisition price of Ahmad, which is AP of Ali plus PE of Ali. So then you minus the recoveries received after the transfer. So this recoveries is received by Ahmad. So the final acquisition price by Ahmad will be 130,060. You get the chargeable gain, and since Ahmad is individual entitled for Schedule 4 exemption, then the disposal is within 3 years, so Rpgt payable is 11,382.